Hello, welcome to Crypto Insights. My name is Thomas. I'm the host of this channel. This week I want to discuss inflation because this has already been a hot topic for quite a while. It actually started when the US started printing money in the form of a stimulus check and we're giving it out to US residents. So during the Corona crisis, the economy and the Fed has been printing money and giving it away. The cost of this will come later in the form of inflation because the purchase power of your money is decreasing. So you can buy less the next time. The longer you wait, the less you can buy. Besides that, now we have Russia invading Ukraine, and in Europe and in the Western countries, we started sanctioning Russia. This means that we are no longer able to buy gas and oil from Russia, which is the cheapest. So the gas price and the oil price are also increasing, which comes back into the price, into transportation, into production. So with all that said, let's jump into this week's video and let's discuss inflation. So we will start off by explaining what is inflation. Inflation is decline of purchasing power over a given currency over time. This means that a currency you can buy less in the future than you can buy now. A little inflation of about 2% is actually very healthy because this means that people are more interested in buying a good now than in 1 year, because in 1 year they can buy 2% less. So that is a healthy inflation, 2%. Currently, we're dealing with 7 or 8% inflation, so it's 4 times as high. And that is obviously not healthy. That creates panic. The first reason why we have this high inflation is because of the money printing, and that especially happened in the US. So just to explain, if you print more money, the amount of goods doesn't change. However, if you print money, households will have more cash and more money to spend on goods. If there is more money chasing the same amount of goods, firms will just put up the price. And I will come with an example. So suppose an economy produces 1,000 units of shoes or fruit. Suppose the money supply of all the people is $10,000. This means that the average price of that product will be $10, 10,000 divided by 1,000. Suppose then that the government prints an extra 5,000 notes, creating a total money supply of 15,000, while the output, so the production, stays the same. This means that people have more cash, but the number of goods is the same. Because people have more cash, they are willing to spend more to buy the goods. So the goods became more scarce. And in this case, they became $15 instead of $10 because you have just a depreciation of your money. So you can spend more money because money itself is less valuable. Besides that, also richdom is relative because as we know, back in the days, if you had a ton of money, you had a lot of money. That's why we still have that expression. Nowadays, it is 1 million or even a billion. Like a million was a lot back in the days. Now with a million, you can't retire yet. So in the future, it will be a trillionaire. And that's because the purchasing power of your money is just declining. The next reason why the prices and the inflation is going up. Global oil prices have jumped more than $3 a barrel, with Brent crude oil climbing above $111, as the European Union nations consider joining the United States in a Russian oil embargo, and after a weekend attack on Saudi oil facilities. So obviously, when the oil price is increasing, it means that traveling becomes more expensive because if you fly or if you use the bus, that transportation good becomes more expensive, and the companies will charge the difference to you because businesses want to become more profitable or at least have the same margin. Then besides that, also oil is used in production. So the production of goods is going to become more expensive. So you can add those extra costs on it, and those will go to the consumer eventually. So we already have the money printing inflation. Now we have an increase in oil price due to the Russian embargo, which is adding up to the inflation. And the third one is that the US Reserve is increasing the interest rate. So the Federal Reserve has raised interest rates for the first time since 2018, as the central bank struggles with soaring US inflation, the impact of the war in Ukraine, and the coronavirus crisis. The Fed raises rates by a quarter percentage point from near zero in what is expected to be the first in a series of raises into the upcoming months. So the reason why this is bad is because most businesses borrow money to continue their business. So this 0.25 percent increase will also be calculated in the sales price. Again, as I said, businesses want to be or stay at the same profitable level or increase profitability. That is always their business goal. On the other side, the increase of the interest rate, and that is actually what the Fed wants to create, is that people again start saving. So they are not starting to spend their money, but they start saving. But obviously, a quarter percentage that you earn on a yearly basis versus 8% of inflation, that doesn't compete with each other. So saving nowadays doesn't exist anymore, because if you save money, you just agree to losing 8 to 9% per year of purchasing power. So you will have the same amount of money in the end of the year, but you can just buy less from it. Then there is also a fourth reason, and this is specifically on food. So globally, food is 20% more expensive now than it was 1 year ago, with the prices rising 4% since January this year. And then the war and wheat prices. Ukraine and Russia represent around 10% and 20%, respectively, of the global wheat production. And nearly 30% of all the wheat exports come from these two countries. Most of this wheat imports by countries in the Middle East and North Africa. For example, Lebanon and Tunisia, two countries with vulnerable economies, import more than half of their wheat from Ukraine. Consequently, production from Ukraine or lack of there influences the global food security. So some countries that have vulnerable economies now out of a sudden have to pay a lot or don't have any wheat at all. So this can have a food crisis in those countries. Because don't forget, wheat is produced and used in a lot of goods: beer, bread, cookies. There's just a lot of food that uses wheat, and those prices are also going to increase, besides the transportation of that wheat and besides the inflation that already happens because of the Federal Reserve money printing. So you can just add, it's just a sum. You can just add up all these factors that increase and higher and higher and higher inflation rate. Now we dig into why you came to this video, and that is, why is this good for crypto? So first of all, the rewards that you can get on holding crypto, farming crypto, staking crypto are a lot higher than the bank is giving. And people want to hedge, meaning that they want to protect themselves against this inflation. So they want to buy assets that don't decrease in value as much as money, or even decrease less than money, because that's the way you make profit. So now you need to make at least 8% return on your capital to break even by the end of the year compared to inflation. So here you can see on Celcius, which is one example. I'm not affiliated with them. If you hold a stable coin on this platform, you get 7.10%. So that's a good hedge. I mean, there is some risk involved, but you need to take some risk to not lose as much as 7 or 8% per year in your bank account or with cash. Then besides that, you can also do a little bit more riskier, because a stablecoin is stable. I will link a video below where I discuss that. Other cryptocurrencies, you can get 9%, 8%, 7%. And I would always suggest to do a mix just to spread your risk. Obviously, again, do your own research, because if you buy cryptocurrency, you have to put a risk of your money. Again, you have to do this to protect yourself against the inflation. Besides that, if we go back to that first example of how inflation started, if we look at some cryptocurrencies, they have a max supply. So now there becomes a lot more money available, while that cryptocurrency sticks with that max supply. So you can do that same calculation, and that just increases the price per Bitcoin or per cryptocurrency that has a max supply. So these are two reasons why I expect more investors to move into cryptocurrency and to experiment more with cryptocurrency, because the more panic hits the market, the more people want to hedge, either to buy gold and silver, which those prices are already up a lot. People might buy stocks that are into commodities or that have a huge bank balance, so they already have their goods and now they can sell it for a higher profit. Or they buy into property. Like, people are just trying to collect assets or art to hedge against inflation. And cryptocurrency might play a very interesting role in that. So, with that said, this is the end of this video. I hope it was informative. If you have any arguments or counter arguments against what I said, because that's possible too, please let me know in the comments. Don't forget to like and subscribe, and I hope to see you next week. Bye.